Welcome to PortfolioCasts, the podcast where we break down real investor portfolios.
In this episode, we're exploring Leon Cooperman from Omega Advisors' portfolio, the key holdings, the concentration, and the thinking behind it.
Leon Cooperman is a name that commands respect on Wall Street. He has over 50 years of experience. His fund, Omega Advisors, is currently managing a portfolio worth $2.8 billion. It is a massive operation built on old-school fundamental analysis.
He really is the dean of value investing. He looks for quality businesses trading below what they are actually worth. Right now, the portfolio is facing some headwinds. The overall gain is down 13.9%. However, today was a bit of a bright spot with a gain of 0.24%.
We need to talk about his conviction in Vertiv Holdings. It is his largest position by far. It accounts for 10.2% of the total portfolio. That is a $366 million bet on one company.
It is a fascinating pick for a value investor. Vertiv is trading at $170.03. It was up nearly 4% today alone. This company is the backbone of the data center world. They provide power and cooling systems.
I saw a recent headline asking if investors should forget Tesla. It suggested buying artificial intelligence stocks like Vertiv instead. Do you think Cooperman is chasing the AI hype?
I don't think he chases anything. He bought in early. He owns over 2 million shares. His overall gain on this position is 12.7%. But look at the valuation, Sarah. The price-earnings ratio is 62.9. That is quite high for a traditional value guy.
It certainly is. The earnings per share sit at $2.65. The dividend yield is almost non-existent at 0.11%. This isn't a play for quarterly checks. This is a play on infrastructure.
Exactly. Look at the 52-week range. This stock was down at $53.60 a year ago. It hit a high of $202.45. It has been a volatile ride, but he hasn't changed his position size recently. He is holding firm at 2,157,000 shares.
He seems very comfortable with that 10% allocation. Let's shift gears to his second largest holding. Energy Transfer LP is a very different story. It makes up 7% of the portfolio.
This is the classic Cooperman income play. He owns 13,095,000 shares. The total value is $224 million. The current price is $17.15.
The dividend yield here is the headline. It is sitting at 7.4%. That is a massive amount of cash flowing back into the fund.
It really is. And the valuation is much more conservative than Vertiv. The PE ratio is only 12.7. It's an undervalued income play. The news lately has been comparing it to companies like Kinetic. Analysts are calling it an undervalued 8% yield for growth.
He is currently down slightly on this one. The overall loss is 0.1%. It is basically flat. But when you are collecting a 7% dividend, you can afford to wait. The 52-week range is narrow, between $14 and $21. It is a stable core holding.
It provides a great balance to the portfolio. You have the high-growth, high-PE tech infrastructure in Vertiv. Then you have the steady, high-yield energy infrastructure in Energy Transfer. He hasn't touched this position recently either. He seems content with his 13 million shares.
Now, the third stock is where we see some recent action. Mirion Technologies. This is 6.1% of the portfolio. What is interesting is that he recently added to this position.
He didn't just add a little bit. He increased his stake by 17.66%. He now holds 8,383,000 shares. That is worth $222 million.
Why the sudden move into Mirion? The stock is at $26.54. It was up over 2% today.
Mirion is a leader in radiation detection and medical imaging. It is a very specialized niche. The overall gain for Cooperman here is 14.1%. He is clearly seeing a catalyst for revaluation.
The PE ratio on this one is wild. It is 254.2. That looks incredibly expensive. The earnings per share are only 12 cents.
It looks expensive on a trailing basis. But the market is looking forward. The stock has more than doubled from its 52-week low of $12. It recently touched $30.28.
There was some news comparing them to Fortive. The suggestion was that Miriam might be the cleaner, more focused play. Cooperman loves a management team that can focus.
He really does. Increasing a position by nearly 18% is a loud signal. He is putting more capital to work in a name that is already performing well for him. It shows he thinks the run isn't over yet.
It's a bold mix in these top three. You have data center cooling, energy pipelines, and radiation detection. It shows the breadth of his fundamental research. He isn't boxed into one sector.
He's looking for the best risk-adjusted returns. Between these three stocks, he has over $800 million deployed. That is nearly a third of his entire portfolio. These are the engines driving Omega Advisors right now.
It is a concentrated strategy. He isn't afraid to go big on his best ideas. Even with the total portfolio down, these top three holdings show some real resilience. They're all showing gains today.
That is the hallmark of a veteran. You find the quality businesses and you wait for the market to realize their value. Whether it's through a 7% dividend or an AI-driven surge in infrastructure demand.
Moving right along into the rest of the portfolio, I want to talk about MP Materials. It represents a massive 6.3% of the total fund. That is nearly $196 million. Mike, what is the story there?
MP Materials is really the crown jewel of the domestic rare earth supply chain. It is currently trading around $65.34. Interestingly, Cooperman recently trimmed this position by about 7.4%. But even with that reduction, it remains a core holding.
Why trim it now? The stock is up over 5% today.
It might just be simple rebalancing. The stock has a wild 52-week range from $18.64 all the way up to $100.25. There's a lot of talk right now about the valuation implications of reshoring the supply chain. He is likely locking in some gains while maintaining a heavy seat at the table.
Let's look at Apollo Global Management next. It is another heavy hitter at 5.6% of the portfolio.
Apollo is a powerhouse in alternative asset management. The position is worth about $192 million. It has been a great performer for Omega, showing an 8% overall gain. The price is currently $143.91. They have a healthy price-earnings ratio of 19.5.
They have been in the news lately regarding QXO raising funds for a merger and acquisition war chest. Does that impact the outlook?
It shows the environment for private equity and credit is heating up. Cooperman hasn't changed this position recently. He seems content to let that 1.4% dividend yield and the capital appreciation do the work. It is a very steady, high-quality business model.
Speaking of steady, I noticed a huge pivot into healthcare. He added significantly to Elevance Health and Cigna.
That is where the real conviction is showing up. He increased the Elevance Health stake by over 21%. That position is now worth $127 million. Even more aggressive was his move on Cigna. He boosted that holding by over 53%.
Those are massive increases. What does the fundamental data tell us?
He is buying value. Elevance is trading at 15 times earnings with a dividend of nearly 2%. Cigna is even cheaper at a 12.3 price-earnings ratio. These are companies with huge earnings per share, $24 for Elevance and $22 for Cigna. He is clearly betting on a healthcare rebound.
We also see some interesting activity in the insurance space with Fidelis Insurance Holdings. He added nearly 15% to that position.
Fidelis is a 3.8% allocation, worth about $126 million. It is currently trading at $18.93. What stands out to me is the dividend yield of 3.15%. It is a classic Cooperman cash-heavy stock with what analysts call exciting potential.
I have to ask about the outliers. I see Manchester United and even a bit of Alphabet in here.
Manchester United is a smaller 1.4% stake. It is up nearly 9% for him. Then you have Alphabet at 0.6% of the portfolio. That has been a home run with a 36% overall gain. He is holding 75,000 shares worth about $24 million. It shows he isn't afraid of big tech if the price is right.
Some of the smaller positions had huge moves today. SunOpta jumped over 13%.
SunOpta is a wild one. Even with today's jump to $4.22, he is still down 28% on that trade. It is a smaller 1.2% allocation. On the flip side, he nearly doubled his stake in Diamedica Therapeutics. That position is up over 50% overall.
Looking at the big picture, the portfolio shows an overall loss of 13.9%. However, it was up 0.24% today. How should investors interpret this?
Leon Cooperman is a veteran. He has 50 years of experience. He is not chasing the daily hype. He is looking for quality businesses trading below intrinsic value. We see him adding to energy with Sunoco and Occidental Petroleum. We see him buying the dip in healthcare.
It feels like a very defensive but opportunistic setup.
Exactly. He is collecting dividends from Enterprise Products Partners and Sunoco. He is waiting for catalysts in companies like Lithium Motors, which trades at a tiny 9 times earnings. He is positioned for a market where fundamentals eventually matter more than momentum.
It is a masterclass in disciplined value investing. Even when the overall portfolio is in the red, he is actively refining his bets.
He is pruning the losers and doubling down on his high-conviction value plays. That is how you survive 50 years on Wall Street. You stay disciplined, you watch the cash flow, and you don't get rattled by short-term volatility.
Such a fascinating look into a legendary mind. That brings us to the end of our deep dive into Omega Advisors. I'm Sarah.
And I'm Mike. Thanks for joining us for this portfolio breakdown.
Thanks for listening to PortfolioCasts.
This content is for educational purposes only and should not be considered financial advice.
Any figures, prices, or portfolio values discussed are approximate and used for illustrative purposes only.
Follow PortfolioCasts for more investor portfolio breakdowns.